Hey, good morning, everybody. Today is Monday, March 9th, 2015. My name is Cliff Backus, and I'm the Chief Market Strategist for Push Button Stock Trading, and this is your daily video market review. Stocks traded sharply lower on Friday as markets appeared to consolidate recent impressive gains. For the week last week, the Nasdaq corrected 1.6%, while the S&P fell 0.7%. But before we go into that, I'd like to point out that you can now follow us on Twitter. You go to your Twitter page and search at pushbuttonstock, and that'll take you to our Twitter feed. Okay, let's take a quick look at the Nasdaq. What we're looking at here is a weekly chart of the longest bull market in history. The current bull market started in March of 2009 and is celebrating its 6th birthday this week. This is a long-term trend line for this market. We have an intermediate trend line that starts in November of 2012. Let's zoom in on that a little bit. This is our intermediate trend line. It starts at this point in November 2012 and continues through today. If we make a parallel copy of this trend line and move it up to the high point since the beginning of this trend, we get a channel line. And the reason that that's important is that channel line marks current resistance in the market. Zooming in a little bit more and switching over to a daily chart, we see the current market is bracketed by support down here in the 48.11 area and resistance right up here at the top of the current trading channel. It looks as if we may get a bit of a short-term correction in the market before we actually reach the upper end of this current trading area, which would probably make this prior high our level of short-term resistance. But for right now, we'll call the top of the channel line resistance in this market. Friday was a tough day for the bulls. The Nasdaq Composite was down 55.44 points, or 1.1%. We closed at the bottom of our daily trading range. Trading volume was higher than the prior day, which gives us another distribution day. Current market is in an uptrend. We've been in an uptrend since January 8th. This weekend, we lost 2 distribution days. They fell off due to age. And so we currently have only 3 distribution days, but the most recent distribution day was a fairly significant down day and kind of changes the complexion of the market over the short term. Right now, we remain on a buy rating on our 1 to 6 month timing model. If we come down and we take a quick look at our MACD histogram, we see that the MACD histogram on Friday went negative. We closed below the 0 line and we are in a downtrend, which gives us a bearish immediate term outlook on the market. Let's take a quick look at the S&P 500. Friday was also a fairly tough day for the S&P 500. The S&P closed down 29.78 points, or 1.42%. S&P also closed near the bottom of its daily trading range. Trading volume was higher than the prior day, which gives us a distribution day. The S&P, like the Nasdaq, has been in a confirmed uptrend since January 8th, and on Friday we lost another distribution day due to age. We also only have 3 distribution days on the S&P 500. But as you can see, this was a bad day for the market and probably does change the complexion of the market over the short term. We are looking at a market in transition on our 1 to 6 month timing model. In order for the market to switch over to a sell rating, or to a sell signal on our 1 to 6 month timing model, 3 things would have to happen. First, we need to see the 10-day simple moving average, which we show in green, turn negative or close below the prior day. Secondly, we need to see the 21-day exponential moving average, which we show in pink, trade below its level of 2 days prior. And finally, we'd have to see the market finish the day below this lower envelope. As you can see, the 10-day simple moving average is heading lower. The 21-day exponential moving average is moving lower, but we didn't undercut the envelope right here. And so that gives us the market in transition rather than a sell signal on the market. If the market closes down significantly on Monday, we will go to a don't buy signal on the S&P 500 on Monday. Let's take a quick look at 4 stocks that are currently on our watch list. First one is LinkedIn Corporation. LinkedIn provides a social networking platform enabling members to share their professional identity online via LinkedIn.com. LinkedIn is putting in this really nice 3 weeks tight base here, the buy point of which would be $276.18. A 3 weeks tight base is generally an add-on base. You don't generally want to initiate positions with a 3 weeks tight, but if you already hold LinkedIn, this would be a wonderful place to add to your position, especially if we broke up through that 276.18 level on heavy trading volume. The next stock I want to take a look at is Gilead Pharmaceutical. Gilead develops therapeutics to treat viral, fungal, respiratory, and cardiovascular diseases. This is not the first time that we've looked at Gilead. What we're looking at with Gilead is this trend line right here. We would buy the stock, particularly for aggressive traders, on a break through this trend line. Notice how the volume has dried up as the trend lines progressed. We're making higher highs and higher lows. And so if we were to break above this trend line on heavy volume, I would say that that would be a good place for aggressive traders to buy it. More conservative investors may want to wait for this 107.77 area. The next stock is Illumina Inc. Illumina Inc. develops integrated systems for the large-scale analysis of genetic variation and biological function. This also isn't the first time we've taken a look at Illumina. We've been watching this area of resistance with Illumina in the 197.37 area. We now have also this trend line setting up, which makes this buy area, let's call it above the trend line. Real nice place to take a position in Illumina. I would look for a break above that trend line on at least 140% of average daily volume. Finally, FleetCor. FleetCor is a global provider of specialized payment products and services to commercial fleets, oil companies, and petroleum marketers. FleetCor has been setting up this really nice cup with handle base. The buy point on this cup and handle would be 156.90. We would want to see it break through the handle area, break above that 156.90 area on at least 140% of average daily volume. Just a little bit of a concern is you want to see coming up the right side of the base, volume pick up. Volume has not picked up on the right side of FleetCor's base. Volume's actually dropped off on the right side of the base. And then you want to see volume drop off as you build the handle, and volume has actually picked up as we build the handle. So there are a couple of of cautionary signs in Fleet Core. But it is setting up a very nice cup and handle. The company gets a checklist rating of 68, and so is a solid fundamental technical stock at this point. If you want to talk about the market or any of our trading strategies, if you want to talk about Fleet Core, LinkedIn, Gilead, Illumina, feel free to give me a call, drop me an email, or if you'd prefer, make an appointment. Come by the office, see what we're up to. If you're out of the area, we can set up a Skype session. Please see my contact information on the home page. If you've not already done so, please take a minute to go to the subscription page and subscribe to Push Button Stock Trading. Also, please follow us on Twitter at PushButtonStock. Again, my name is Cliff Backus. That's your daily video market review. Have a safe and profitable day. Keep your stops in place, and we'll see you again tomorrow. Please stay tuned for our important disclaimers. All the best. Disclaimers. Push Button Stock Trading Video Market Review is produced and edited by Clifford B. Backus. Mr. Backus is a Senior Vice President of Investments, Technical Analyst, Portfolio Manager, and Partner with the investment firm of Ohannes & Liqueurs, Incorporated. Video Market Review is produced solely for the benefit of our clients, friends, and colleagues. Anything written, stolen, and/or plagiarized in this publication is done without malice. Further, the analysis and opinions expressed in this publication are strictly those of the editor and not of Ohannes & Liqueurs, Incorporated, its affiliates, subsidiaries, or any of the officers or employees of Ohannes & Liqueurs, Inc. On that note, we submit the following. The analysis, calculations, and evaluations presented herein are based on data and assumptions Ohannes & Liqueurs, Incorporated believes to be accurate. Ohannes & Liqueurs, Incorporated makes no representation that such analysis or calculations are accurate or that such valuations represent levels at which actual trades may occur. This report has been prepared from original sources, except where otherwise noted, and data we believe to be reliable. Ohannes & Liqueurs, Inc., its affiliates and subsidiaries and/or their officers and employees or their families may from time to time acquire, hold, or sell a position in the securities mentioned herein. Moreover, opinions may differ from one entity to the next. If we are used in connection with the purchase or sale of any security discussed in this report, we may act as principal for our own account or as agent for both the buyer and the seller. Push Button Stock Trading is dedicated to the education of friends, clients, and paid subscribers. Push Button Stock Trading is an information service only. The information provided herein is not to be construed as an offer to buy or sell stocks of any kind. Push Button Stock Trading is created to aid subscribers in making informed investment decisions based wholly or in part on technical analysis. It's possible that at this time or some subsequent date, the editors of Push Button Stock Trading may own, buy, or sell the investments presented. All investors should consult a qualified professional before making any investment. The information provided has been obtained from sources deemed to be reliable, but it is not guaranteed as to the accuracy or completeness. The editors of Push Button Stock Trading make every effort to provide timely information to subscribers, but cannot guarantee specific delivery times due to factors beyond our control.